back to the Patrick Lane Show, where we talk about personal finance, investing, and real estate. And today we're going to talk about something that's pretty important for us retail investors, and it could give us an opportunity to jump in early on stocks that we like. But before we do that, do me a favor, smash the like button, hit the subscribe button, ring that notification bell. We really appreciate you helping us to grow the channel. Hopefully you get some entertainment or education value out of the videos. And it's all for the low cost of a like. So we appreciate your help. We're going to talk about what happened this week that I think is important for retail investors who want to get in on IPOs. Now, there are two companies now. One of them, of course, has got some dings on its reputation right now, and that's Robinhood. The other one is SoFi, which is basically a startup in the investing app space. And so let's talk about Robinhood first. Robinhood came out a couple of days ago in the evening and said, actually they didn't say, but there was a story in Reuters that was reporting that Robinhood was developing a part of their app so that retail investors like us who have the Robinhood app could participate in IPOs. Well, first of all, let's take one step backwards and figure out exactly what an IPO is and why we can't right now invest in those IPOs. So an IPO is the stock's initial public offering. You probably know that already, but what happens is behind the scenes, the company goes to institutional investors, market makers, investment banks, hedge funds, and they talk about them going public, what their company does, what the prospects are, and they try to, together with those investment banks, come up with an IPO price. That's the initial price per share that they're going to offer their shares to the public for. Well, in exchange for doing this, guess what? Those institutional investors, those hedge funds, those market makers get a piece of that initial public offering before it's actually offered to the public. And so those people, the institutions, the hedgies, the market makers, remember Citadel and all of their problems in the last few weeks with GameStop, those groups, those entities, those businesses are getting the advanced draw for those IPOs. Well, why does that matter? It matters because typically when a company IPOs on that first day, the first week, the first couple of weeks, that initial price per share that you and I get to buy the stock for actually jumps up. And it goes, the history shows that it goes up. In 2020, for example, the average IPO went up 36% from the IPO price. So if you're an institution, a hedge fund, a market maker, investment bank behind the scenes, and you're buying the stock for $30 or $100, let's say, and then the stock jumps $36 as soon as you release it to the public, then guess what? Number one, the company loses out because they didn't get that extra 36%, and that's the whole point of an IPO, is to raise capital for the company to build its business out. So the company loses because it misses out on that 36%, but also those of us in the public who really like the company lose out because we fall behind in not being able to get that 36% value of that company. Who makes that profit? Guess what? It's back to the same old bad guys who we've talked about with GameStop, and not bad, but this is their business model and it doesn't benefit us. It is the hedge funds, the market makers, institutional investors, and investment banks, and they are the ones who are getting that 36% profit right out of the gate. And guess what they can do? Because they are not inside investors of the company, they can go ahead and sell their shares and make that profit immediately and capture that capital profit. And typically, guess what? On an IPO, 80% of those shares are usually held back and given to either retained by the company or they're provided to the market maker, the institutional investors, the hedge funds, and the investment banks. And so those 80% of those shares that are issued, if a stock's going to issue 1 million shares, 800,000 of them are kept by those entities, and only the other 20%, or 200,000 in this example, gets released to you and I as retail investors. Now, Robinhood came out, back to Robinhood. Robinhood came out a couple of days ago, and it was found out by Reuters that they are working on a part of their platform to allow us to invest directly into the IPOs at the IPO price. So it's going to be interesting because we will be able to be in the same position side by side with the institutions, the investment banks, the hedge funds, the market makers, and we'll be able to capture that 36% that they are capturing. And so I think it's going to be a really good option for us. Now, as soon as Robinhood came out and said it, and Robinhood's been beat up and bloodied and battered over the past few months, rightfully so, because what they did to retail investors and not allowing us to buy GameStop. But as soon as Robinhood's story broke, guess what? A few hours later, SoFi came out, and apparently it looks, as I'm digging into this, it looks like SoFi has been working on this for quite a bit, and they're farther along in the process than Robinhood is. Robinhood is still working on it, trying to get it right in order to actually bring it online in time for their Robinhood's IPO, so that if we are retail investors on the Robinhood app, we can actually buy the Robinhood stock at the IPO price rather than after it jumps up, presumably, on their IPO day. And so that's kind of what their target is according to this Reuters article. Now, SoFi, when you dig into theirs, guess what? It's already happening. They're out there already on their website with an image and a notification that you can buy the IPO stocks right through the app on your phone. Well, SoFi, most of us haven't heard of SoFi as an investment app like Robinhood because it doesn't have near the market share that Robinhood does right now. But SoFi's been around for a while. They started off in student loan refinancing, and then they started offering other loans and typical banking services online. And now they've moved into the investment space where it's a similar process to Robinhood or Webull or eToro or the others, where you can jump on the app on your phone and do some trading. Well, as part of the expansion of that service to their customers, they're going to offer this IPO buy-in, and they're already doing it. Now, the caveat there is you've got to have $3,000 in your account to be able to do it. So I think it's an interesting development. It's going to be, in my mind, a good thing for retail investors because we can jump in on those IPO prices. And guess what? Just think about Roblox. Just a few days ago, Roblox went public, and the initial, the IPO was priced at $45, right? So everybody's all lined up because, most of us understand that Roblox is an ecosystem all to itself, and it's going to really grow over the years as more people use it, more developers create games, and they start generating revenue from the game share. Well, we wanted to jump in at the $45 IPO price, and guess what? I put in orders that are still sitting in my account for $45 because it never hit the market at $45. The hedge funds, the institutional banks, the institutional investors, investment banks, and market makers bought at $45. But guess what? As soon as it hit the market and started trading, those of us who are retail investors out there who wanted it, we couldn't get it for $45. It jumped up to $65, $70, and we were locked out. So unless you want to pay that $20 premium right out of the gate, your order for buying Roblox is probably still sitting there like mine, unexecuted. So I think it's going to be a great opportunity for those of us who want to buy IPO shares at the actual IPO price to be able to buy in through SoFi or Robinhood. And I guarantee you, Webull and eToro and all the others are going to go down this road as well. And it's only going to be a good thing for us. And it's going to be a punch in the nose to Wall Street banks and investment banks and institutional investors, hedge funds, and market makers, because they're not going to control it as much as they do now. So do me a favor, tell me down below in the comments what you think. Is this going to be a good thing that we're going to be able to buy IPOs shares as retail investors? Or do you think it's going to be a bad thing and it's just going to be manipulated again and we're going to get locked out again? Let me know your thoughts in the comments down below. And I appreciate you hitting that like button, hitting the subscribe button, ringing that notification bell, and we'll see you on the next video.